You're watching the Daily Market Comment at XM.com by Mario Hadjikyriacos. I'm Christina Marujos. It will be an eventful day in Britain as the nation's Supreme Court will decide today whether Boris Johnson's decision to suspend Parliament for 5 weeks was lawful or not. For the pound, this may represent a substantial upside risk. If the judges rule the suspension was perfectly lawful, then nothing changes and UK lawmakers stay home until October 14th. That may weigh on the pound slightly, but any losses are unlikely to be significant. However, if the court decides that Boris acted unlawfully, then there are a range of possible outcomes, of which most seem positive for sterling. For instance, the Supreme Court could compel Parliament to return, which would further weaken Johnson's no-deal negotiating hand, reducing the risk of a disorderly Brexit. The Reserve Bank of New Zealand will announce its rate decision on Wednesday at 2 o'clock GMT. Economists expect no change in policy, but markets are not as certain, assigning an approximately 20% probability of a surprise quarter-point rate cut. Even though the domestic economy continues to struggle, the RBNZ is still unlikely to act again so soon. Assuming the RBNZ stands pat, then the Kiwi may spike higher on the decision. That said, the central bank will almost certainly keep the door open for more action at the November meeting, so any gains may be only modest. In the broader market, U.S. stocks recovered some early losses to close virtually unchanged yesterday. The recovery was helped by a stronger than expected U.S. market manufacturing PMI for September. Yet in a sign that concerns about the global outlook are alive and kicking, gold prices climbed as well, even despite a stronger dollar. Similarly, the Japanese yen and Swiss franc outperformed in the FX market as investors turned more defensive. Euro franc is now near its recent lows again, raising the question of whether the S&B will soon step into the market to keep the Swiss currency from appreciating further. This was today's Daily Market Comment. Thank you for joining us at XM.com.